Well, good evening, ladies and gentlemen, and thank you for being with us today. My name is John Needham. I'll be your host for today and for many more days, hopefully. Anyway, we've got a lot of our usual friends here, which is wonderful to see you all. And we should also say good morning to our friends on the east coast of Australia. Half of them are now good afternoon because they have daylight saving and Queensland doesn't. And it's definitely good afternoon to our friends across the ditch in the Shaky Isles. Okay, how's the volume, folks? Can you hear me all right? Is this all working as designed? Somebody just type in the question box for me, would you please? Let me know that you can hear me all right. No, nobody yet. We've got a problem with volume. That's on. What's the problem with volume? No, it's just delayed. Mark L, of course. You're sick of me saying this, but there's no party without Mark. And he was quick to let me know that he could hear us all right. And if Mark's getting the volume, then all of you should, because he's a long, long way away from me. Anyway, grand to have you here. Gig, glad you got off the golf course to come and see us. Greg Palladini, of course. Jim over in Hull in England. Jim is doing a tutor at the moment. Jerry Winter is with us. Jerry's been our broker for many, many years, and he's the most wonderful man. If any of you would like to have a broker who really understands the business and who is super diligent in staying in touch and contact you, let me know and I'll be happy to arrange an introduction to Jerry Winter. Jerry, thanks for being with us today. Hope you're well. Hope the family's well. Good to have you here. Joe's with us. Justin down in the Hunter Valley's with us. I bet you've had some rain down there, mate. Leo's with us. Leo's a tutorial guy, as was Justin, of course. Leo sent me a wonderful he's a short-term trader as well. He sent me a short-term chart of the magic that happens when you put the Danielcode numbers onto your short-term chart. So I'll be showing that to you shortly. Milton's with us, of course. Glad to have you with us. Nathan's with us. Good to have you. Peter Mack, who's not a day trader. Robert and Robin, both of them. Peter, many Peters. Yes, another Peter. Good to have you with us. And John D, grand to have you with us, my friend. Okay, moving on, because we have a whole lot to talk about today. And let's see where we can get to with all of this. This is our basic assumption about markets, which we managed to prove over the years. Markets are rational, orderly, and sometimes predictable. And the Danielcode is a set of numbers and ratios that control time and price in all markets. This, folks, is the chart of the fourth seal in gold from Frank DB. Frank came to me as a student in 2011. He had his lovely fiancée with him, Anne. They're now married with 2 or might even be 3 children. And he was a very young man then. I think he liked maybe 20-something. And he said to me, this was a tutorial we had in Taupo in the middle of the beautiful North Island of New Zealand, where I was living at the time. And Frank came to me and said, I've never seen a financial chart. I've never read a financial paper, but I love your articles. I used to write a lot for Financial Sense back in the day, something I should start up again. And he said, would you teach me how to trade markets? And that was actually the first year that I taught the fourth seal, which is our forecasting methodology. And Frank took to it like a duck to water and spent a number of years just absolutely drilling into that. And he's very, very good at it. He's also a pretty substantial gold bullion trader, as well as trading gold futures, of course. And every week he produces the fourth seal chart. This is actually the 6-day chart of gold. He produces a 29-day chart as well, occasionally a 12-day chart. And he does that for gold and S&P and crude oil, and it's pretty good. In fact, it's very good. This is his comments at the moment on gold, and he's looking at look at the bottom part of this. He's looking at the possibility of a breakout into a long-term new bull market, and that's what the Danielcode time cycles are now suggesting. Very interesting stuff, and you should also read his comments in particular on the S&P. He's been terribly brave. The whole time since the all-time high, he's been saying we've got another high still to come. That's not the end of the bull market. And that was pretty brave to be saying for a few months after that high. But now, of course, it's not that far away, is it? You get a decent Santa Claus rally, and some of these markets will be up testing those all-time highs. The Dow made a new high for the year today. The optimism in this market is wonderful. It's sensational, and whether it's justified or not is another matter, but we'll come to that in a while. So let's move on. This, folks, is from Leo. He wrote to me a couple of days ago, said he's attaching the December COMEX gold for the week of November 24th, showing how market is vibrating on Danielcode numbers. It's a 10-minute bar chart for clarity. Thank you, Leo. It's pretty amazing stuff, isn't it? The market, as I say, sometimes markets know these Danielcode numbers, and in fact, you'll get to a stage where markets are actually talking to you, and what they're saying is, I know these ratios and I'm tracking them. And sometimes it'll say to you, not these ratios, try something different. But here's Leo with his 10-day chart, and it's most kind of you to share that with us, Leo. It's wonderful stuff, and you've done a few of these. Please keep them coming, because we've got, although we don't teach short-term trading as such, Danielcode controls all markets in all time frames exactly the same. So if you know how to trade daily bars in the Danielcode, you will know how to trade 10-minute bars, 15-minute bars, whatever minute bars you're interested in. So thank you for that, Leo. That's very kind of you. Okay, so start at the beginning for some of our newer members. Start with your daily trade signals. We have two lots of those. First is the TO3s. They are all turns. And then we have the TO3 Plus, which expands on the TO3s and adds some continuation signals. But that's your first port of call. Take a look at those signals. They're posted every day. We get data around 6:30 US Eastern Time, and they are posted usually before 7:30 US Eastern Time. Once you've done that, go to our trade program, which is a pretty cute little bit of kit, as you can see here. It not only puts in all of the signals from the TO3 Plus bars or the TO3, whichever you're subscribed to, but in addition, it carries forward the signals from the days earlier. Some of these signals are valid for 3 days, others are valid for 2 days. Some we expect to be elected on the day the signal is posted. And that is all sorted out by this wonderful trade program that tells you where the entry is exactly, where the protective stop is exactly, what are the stop loss and exit protocols, are they correlated? That's a very, very big deal. It's very easy to start trading away, particularly in Forex, and find you're trading 2 or 3 of the majors, but if they've got USD on one side or any other of the currencies, they are correlated to that degree. So this will tell you whether they're correlated or not. So let's see what we've been doing this week. Equities have been having a wonderful battle for direction. They've been struggling for direction for a while, and there's a huge divergence now between the various equities. Nasdaq's been super strong up until today, where it's had a little pullback. Dow, as I say, made a new high for the year this day. It's so bullish you couldn't get a herd of them. And the S&P's chopping away in the middle, but the Russell has been very, very negative compared to the other indices, just running different patterns altogether. But still, the Danielcode trade signals continue to perform exactly as they should. This is today's buy in the US dollar index. And I want you to think a little bit about exits. The simplest form of exit is to exit on the first profitable close or the first profitable open. And that's an oldie. That's been around for years and years, and it's got one very, very important basis to it, that if your trade is elected, that's fine. The next question, though, is after that initial bar, has there been a change of trend or not? Is there a probability that the trend has changed to up, in which case you'd be holding on to this trade, or is there not that probability, in which case you'd be either exiting, taking your profit, saying thank you, or you would be using a amended stop loss strategy. So that's a big deal when you're starting. The very simplest way is exit first profitable close or first profitable open. They're very much the same thing. And you can start straight into your Danielcode TO3 or TO3 plus signals. If you'd like to have a look at them, you're most welcome to take a free trial at our website and just see for yourself what we're doing. This is gold, which is very, very interesting today in particular. You can see we had a really strong sell signal. We had a TO3 and a blue line sell signal at yesterday's high. Now, that's the strongest signal we create, and it was elected. You had wonderful target recognition of just a 9-tick variance, and for this market, we'd actually be allowing a 20-tick variance as it's got stronger and stronger over the years. But the reality is it still sticks to its 0.1%, not 1%, 0.1% of its old prices. And I still allow 11, 12 ticks. That's all I allow for variance. And it's remarkable that this market's able to be so accurate, as they all are. It's interesting stuff. So we had this strong TO3 and blue line sell signal, which was elected. But gold and silver are very, very highly correlated, and gold and the US dollar index are usually inversely correlated. So this has sort of followed its inverse correlation with the US dollar index. It went up, as I just showed you. This one went down. Pretty feeble move down, nothing much in it. But the interesting thing is that silver, with which it's also highly correlated, went up. And not only did it go up, this is the silver chart here you're looking at now, folks. Not only did it go up, it closed above the black line, the Danielcode, famous Danielcode black line, which is the last level of support and resistance for any swing. And what's particularly interesting about the black line, it's very, very powerful, and a close above the black line, which we've had here, shifts the probabilities quite massively in favor of the whatever the operating swing is being taken out. Now, that doesn't mean so much on daily charts, because the black line will be fairly close to that swing high anyway. But once you start seeing that on a 6-day chart or a 12-day chart, it's truly massive. Some years ago, when gold was making its all-time high, Jerry might even remember this, we were looking at a 6-day chart, and I said, if this market has a daily close above that black line, then the probabilities are in the 90% plus that the swing will be taken out. And on the 6-day chart, that swing was worth about $28,000 per one contract, as I remember. So it's good stuff to remember. It's important stuff to know. And how do you reconcile these things? Well, you don't reconcile them. You simply acknowledge that there's a divergence. Silver thinks the bull rally is on and still going. Gold was a little more cautious, and that big move in the US dollar index, it actually only triggered a relatively small move in gold So if you look at those inverse correlations relative to each other, don't be surprised if the next thing you're looking for is a flip me buy signal in gold. And if you don't know what a flip me signal is, go back through some of our previous Danielcode webinars, all of which are posted on the web and at YouTube, and go through them. This is wheat. I mean, what a marvelous, marvelous market. Have a look at the low. Target recognition and TO3 plus buy signal. I mean, it's just amazing. The variance was one tick. 527 correct 2 was the low. There's the blue line at 527 correct 4, and it just kept doing it. You can see it had its inside bar. The buy signal was then elected yesterday. Look where the high went to, 2 ticks variance from its red line, and today another big kick up. This is target recognition. 0 variance today. The close was at one of those numbers. I think it was 570 correct 2. 0 variance against your target recognition. It is amazing stuff, and we're privileged to see that all the time, which is what you'll get at the Danielcode. This is T-bond, which is a bit of an interesting thing. You'll see more of when we get to looking at its algo, that it switched to a sell signal about 3-4 days ago. It breached that and gave you a flip me buy into yesterday's high. That was the second day up from the flip me high. And today we had a TO3 sell signal from yesterday, and you don't see so much of the target recognition there because this contract's just rolled over. On the old chart, it had blue lines recognition everywhere, all over it. This one, the target recognition is actually 3 bars away from the turn, which is unusual. But if you saw the previous month, you'd understand it was only 1 bar away from its blue line turn. Strong signal? Yes, it is. What did the market think of it? Not much. Wasn't much excitement really one way or the other. And it's a little bit, I think, struggling for direction. Will be interesting to see what happens in the next few days. Remember, this chart this is the big daddy of bonds. This is the long bond, and this chart is showing you the friction between the Fed's take on the market and traders' take on the market. The Fed wants this market going down, which shows interest rates going up. Traders want this market going up, which means interest rates going down. So the price of this particular market, which is T-bonds, is inverse to the interest rate. So price up means interest rate down, price down means interest rates up. So we got that turn today. That's another little bit of comfort to equities traders. We'll see what they get tomorrow, which of course is going to be Friday, and Friday is the most bullish day of the week. So we'll probably get some sort of a bar up. Excuse me. This wonderful thing you're looking at is sugar, and it's just been a model of perfection. Have a look when I started with our TO3 sell signal up there last week. Big bar down, another bar down, straight onto its black line at 25.81. Might be 26.81. I think I need new specs. And then it had 1, 2, 3. Look how immaculate it was, finding that black line and making super sure that it didn't close below the black line until today came. And for whatever reason, probably a price report, maybe an ag report, that's blown this thing out, and it dived down to give us $1,600 at today's close on this short trade, which is pretty nice in a small market like sugar. Here we are. The same thing is happening in Forex, guys, exactly the same. It runs exactly the same as futures. There's no difference. And I know that the futures guys always try to distinguish themselves by saying, oh, we have pips, not ticks. They try to make it appear different. It's not. All markets are the same to the Daniel code. So this was a TO3 and a blue line sell signal today, which was elected after near perfect target recognition 2 days ago. Down it went. And have a look at this thing. This is the New Zealand US dollar. Talk about loving the Daniel code blue lines. It's very, very interesting what's happened in New Zealand, a country that's very dear to me because my wife is a Kiwi, what we call, people from New Zealand, we call them Kiwis. That's their national bird. It's a flightless bird, very beautiful, called a Kiwi. They've had a dreadful time with Jacinda Ardern as their Prime Minister. You should have got the clue that she was the Young Socialist of the Year back in the day, and International Young Socialist of the Year, I should add. And she's brought all of that rubbish to New Zealand, completely destroyed the economy, gone absolutely mad on race relations, all sorts of things. It's been a total disaster. The good news is she's gone. The new Prime Minister, Luxon, he is a real corporate guy. He's an ex-chief executive of Air New Zealand. And the good news is my old friend Winston Peters is one of the two deputy premiers. New Zealand's like a lot of European countries that you need to have a coalition to form government, the way the methodology of counting the votes and apportioning them is set under New Zealand's constitution. It is next to impossible for any one party to have a majority on its own. So they have to enter into coalitions with like-minded parties, which they've done now. And that's how Winston got to be Deputy Prime Minister yet again. Winston used to be the racing minister. He's a wonderful man. He's a great bon vivant. He's got an unquenchable source of stories. Loves a drink, loves a nice racehorse, and loves a party anywhere. He's an all-round good guy, and I'm delighted to see him back in government in New Zealand. It gives us some hope that things will get better over there because they've got some problems at the moment. Okay, so here we are. This is new, folks. These are the one of the Super 6 charts. This is the S&P E-mini, and this is a 6-day chart. This is our basic timing chart, as you know. And as you can see with this chart, the last bar on it ended today. That's the 6 days complete. And what you've got is you've got a key reversal bar at Daniel code resistance at the blue line. You can see the blue line there at 459.625. The high of this key reversal bar is not far from that. I've been doing this for a select group of clients, and it's a marvelous thing, the 6-day chart, because it allows you to see a different view of markets, and it's a very penetrating view of markets. We've now got these available from next week. You should subscribe to the Danielcode website Super. That gives you everything, all of the TO3 signals, TO3 plus signals, 4th seal, 6th seal, everything, timing charts, Frank's commentary, you name it, you get the lot, including these charts. And we're presently doing them for the S&P crude oil, gold, and UST bonds. So if you'd like to be receiving those charts, they're prepared on the weekend and on Wednesday evening. Go ahead and get yourself subscribed to the Danielcode website Super package. When you've done that, send me an email if you like. If you would prefer these things to be sent to you by email, I'm happy to do that. But from Monday, maybe even from today, I spoke to Terry some hours ago. He was working on getting these things placed and accepted at the Danielcode website. So that one is the S&P, very interesting. Key reversal bar at Danielcode price. This is gold. Have a look at it. Danielcode target recognition. Boy, it's so exact. The high on this 6-day chart and that blue line, it's incredible. And as you can see, you'll see the same thing in crude oil and UST bonds. So if you're interested in these 6-day charts, they'll come out twice a week, more often if necessary. If we get a massive blowout any time in the foreseeable future, they'll be updated on the day, just the same way as we do the rest of the members chart. So if you'd like to subscribe to the Super 6 charts, will certainly give you a totally new insight into the markets. Have a look and just be aware of that gap in there into today's bar. Gap and run is a fairly unusual pattern. It usually shows terrific strength. We'll see what happens. Okay, so here is the third of the four. I haven't done crude oil for you. It's not showing much at all. But this is UST bonds. And you can see just how carefully it's picking its way up there. Now, these were done on Wednesday night, so we haven't got the latest day's pricing on them. But there you are. If you'd like to join the 499 Club, get yourself subscribed to the website Super. Send me an email if you'd like me to email them to you twice a week, or if you're happy to take them from the website, then that's fine. Whoa, just a minute, sweetie. Oh, my dear cat has arrived. For a man who said no more cats ever, my son came home with a matched pair, a brother and a sister. And yes, they are very beautiful. And the little one's a bit loving, and she loves to jump up on the desk and play paddy paws on on the computer panels, you know. So I've had to be a bit brutal and ask her to leave. She's a real sweetheart. Matter of interest, we have 2 rescue dogs and 2 rescue cats. So it's a household where there's always something going on. Okay, let's keep moving. Danielcode tutorial, I put the link up there. The Danielcode tutorial will make you a super trader. There's no doubt about that. I've done it for many, many people and continue to do it. And I'm excited to take people and turn them into super traders. And there's the link to see the curriculum. I've put a new quotation in there. Those of you who were with us, last week, got to hear Mark L., who's with us today, and he did an interview last week with me, just setting out how he found the Danielcode, what it was for him, what it did for him. And as he said, I've said it before and I'll say it again, the Danielcode and John Needham have changed my life. I'm going to show you in a few moments a link to that conversation with Mark, and it runs for about 24 minutes. And I really suggest that you listen to it. You, in fact, watch it. It's on a YouTube link. Because Mark sets out all of the issues that I'm sure so many traders encounter. The uncertainties, the problems, the extent your brain will go to defeat the system. It's quite uncanny, and it's a very, very good discussion. I really urge you to watch it. I'll show you the link next, I think, but it's also at the website. You want to learn all that stuff. The Danielcode trading tutorial is how you learn it. You not only learn about everything there is to know about trading price, but you learn to create signals and trade time, which is the big banger. You see these people, I've introduced them to you. Mark himself ran 1,000% on margin for his paper trading of natural gas 2016. Last week, Robin was 820% on margin for another piece of paper trading. Jim over in Hull is doing the same thing. A month or more ago, we had Scott and the lovely Amy, and they were sitting at about 540% trading wheat for 10 months. So this goes on and on and on. All of these people have learned to trade time from the Danielcode tutorial, and it is absolutely deadly. And if you want to be a serious trader and make those sorts of returns, that's how you do it. The Danielcode tutorial. We've got a special offer on at the moment. You'll save $1,000 if you're one of the first 3 to take up this offer, and if you're able to start before 11th December. If you're already a good trader, I'll make you better. If you're a complete novice, have never seen a trading chart, I'll teach you how and everything worth knowing about markets. Okay, so at our last webinar, this was it was called Aim High, and this is where Mark did his interview with us. That's the link there. That's the link to the website link, and it's straight into YouTube. But it's also on the website if you haven't got the time to look at it now. And I really, really do recommend that you look at that and listen to what Mark's had to say. So creating and trading Danielcode time signals are the best trading system I know or have ever heard of, and it's only available at the Danielcode tutorial. And Jerry, who came to a number of Danielcode tutorials over the years, it's all so different now you wouldn't recognize it. This trading time is the bee's knees, and all of our clients are coming up with these amazing percentages on paper trading. Now, we all know paper trading is not the same as the real thing, but if you listen to Mark talking about how he did his paper trading, there's a tool on Trade Navigator where you can set up a past chart, and it will only show you up to the current daily bar, and then you've got to click to go on the next one. And as Mark says, if you do that honestly, you can't go back and change anything. You've got to be 100% honest, because you're not fooling anyone, you're only fooling yourself. But if you're 100% honest with that trading, it's as close as you can possibly get to real-time trading. And it's a wonderful, wonderful teaching tool. So if you aspire to be one of the great ones, let me know, and I'll be happy to start you on that path. Okay, so let's have a look what all this excitement I think is happening about these algos. This is the Dow. Look at today's bar. It's pretty enormous, isn't it? And it's just roared up, made a new high for the year. The other one that's been a high delta has been the NASDAQ. As you can see, it's had a huge run this year, and a down bar today, just to complicate the outlook. Okay, so this is what happens when we put this algorithm on it. Now, this is one of a number of algorithms. This one was, I created this in 2018, and it's been running very satisfactorily ever since. And the question is, are the algos the answer to everything? Well, like all those questions, the answer is yes and no. First of all, it depends what you're looking for. We're giving up some dollars, some certainty of entry, and you can see that most of these entries on the algo are just off the tops and just off the bottoms, and that's what you're giving up for the program. As opposed to that, once you're in, it's all very simple, and if you can just add a bit of common sense in the way of using a proper stop loss regime, which I'm going to talk about, but I'm happy to talk to you a whole lot more about it if you're interested. You can trade this stuff in a very relaxed manner, and it's pretty fantastic. This is currently one of the very big markets, so it's no surprise to see those big earning amounts on there. The real problem for algos is how do you manage the stuff that isn't high volatility. So same thing with NASDAQ. You can see here that even on some of these moves that haven't sort of had legs anywhere, it's done all right. You haven't really got hurt. When the market has had big moves, you get the lot. That's the power of this particular algorithm. And algorithm, in case you missed last week's, 2 weeks ago webinar, algorithm is just a name for a mathematical function that tells you which tools to use and what order to place them in, and for how long you should use them. That's basically what an algorithm is. And algorithms now, they're a huge buzzword. They've come to mean specifically an instruction that you give to a computer, but algorithms have been around forever. If you are a trader, you have undoubtedly used algorithms, and you've done it either in your head or on a scrap of paper. So if we think, for example, about Danielcode price trading, and your algorithm for that, the first thing is find a Danielcode target with target recognition. That means the high or low or the close of the bar must be within 0.1%, not 1%, 1/10 of 1% of a known Danielcode number, which we create on the members charts. You tell the algorithm that's the first thing you've got to do, because if you don't have that target recognition, the probability of a turn is round about 4 to 5%. Once you have target recognition, the probability of a turn moves into the high 90s. Don't forget, everything to do with trading is about probabilities. That's what we're trading, is probabilities. There are no certainties, but if you can see patterns, I'm telling you one now, where the percentage gets up into the 90s, you want to be all over it. And that's what you would get with an algorithm. So that would be step one in an algorithm. Step two would then be, are you overbought or oversold on the appropriate stochastic? Yes or no? As the answer is yes, is there divergence on our proprietary momentum indicator? You guys who've done a tutorial will know what I'm talking about. And if all of those things are a yes, then you've got a new entry. And where's the entry? 2 ticks below the low if it's a short, or 2 ticks above the high of the setup bar if it's a long. And all of that's in an algorithm. Many of you have done something similar just in your head. You're doing it every day. To get a trade, I need this, this, and this to happen. You're using an algorithm. But it's been hijacked now by the computer guys. But I can assure you, algorithms have been around a long time before computers ever came into the world. Okay, what is the sensible thing you can do with an algorithm? Well, you need a stop loss. You need a protective stop loss, because with the low volatility moves, you can see I've got a little cross and the word fail fairly prominently here in 1, 2, 3, 4, 5 positions. And there where low volatility moves gave back too much of your profit or didn't trigger new signals. And that can happen. Remember, this stuff is all based on probabilities. You can use a number of different stops. The simple one I'm showing you here is a 3-bar stop. That's the highest high of the lowest low of the last 3 bars. And in a trending market, that doesn't get breached. You can see here, I'll bring over a tool to show you, because this is rather important. Here we are. You can see all this run up here from this low all the way up. It hasn't hit that black line at all. Same up here, goes all the way up. It doesn't hit the black line until that bar. Coming down, there's one, and apart from that, it doesn't hit the black line until this bar here. And there are reasons why those bars would have given you a stop and reverse signal, which you'll learn as we go along. Right here, same thing. Look, this whole move down has never got near the black line there until this bar down here. Same here. Straight run down. Look at this. Straight run up. One correction, and the rest up it goes. I've been lazy and shown this going straight through it might not have got elected, that move. That might be why I've done it. Anyway, the difference between the two options is very, very small. So let me go back to my normal. Really, is that normal? Okay. Says it is, it must be. Okay, let's move on. That is the Dow. You can see it's made a whole lot of money, hasn't it? For nothing too exciting in your behalf, it's simply the colors. If you can tell pink from blue, same thing. Have a look at this chart here. The most common protective stop that the market uses is a 2-bar stop. That's the highest high and the lowest low of the last 2 bars. And I've used that here. You can see it's made some differences. If you want to look at a 2-bar stop, it's simply the highest high or the lowest low of the last 2 bars. And there's a question about whether you would include inside bars or not. If you're a new trader, don't. If you're a competent trader, you have to trade the inside bars or you're leaving too much money on the table. So that's the same market with a 2-bar stop. It tightens things up a little bit, and it's very, very interesting. If you've got a rainy day somewhere and a bit of time on your hands, go through a chart and just look at all the times that the 2-bar is breached. Because it's really interesting how powerful it is. And it's powerful in a stupid way. It has no particular meaning, but it's just that is taught and it's simple. So the vast majority of traders use a 2-bar stop. Okay, so this is what happens if you understand trading Danielcode time. You create the signals and trade it. It's what I teach you at the tutorials. Have a look at it. And then add a 2-bar stop just because you're going to be lazy. If you're actually creating time signal, it'll tell you when to reverse exactly and the number and all of that stuff. That's where you get your 5, 6, 7, 8, 900% on margin from. Accurate trading. But have a look at this for you guys who've done a tutorial. You can have a try about this, put on a 2-bar stop, see what it does for you. Pretty interesting stuff. That is a powerful tool, not because it's clever, but because it's taught, and it's a bit like some of those silly Fibonacci numbers. They've become relevant through the fact that the industry uses them. Forex works exactly the same, no difference, it's all exactly the same, but have a look. You can see I've put a big red oval around that piece of trading on the left of your chart. There's just not enough volatility to trigger that signal. It keeps creating sell signals and the market doesn't go to them. That's why you need a proper stop loss regime. If you put a proper stop loss regime on top of this, I can tell you it's very, very good, because you don't get killed in the small moves, and you do get all of the lovely lolly when the market decides that it wants to be volatile. And have a look at this. This is the Canadian chief, or the Canadian against the Swiss franc. Nothing here really suggested this was going to be exciting stuff. It had its huge consolidation in that red oval up there. Then it had a nice breakout move and it went back into consolidations again. All of a sudden, whooshka, up it goes. Huge move up in September. Equally huge move down with really only 2 counter trends in it. Pretty fantastic stuff. Who knew Forex could be so wonderful? And there you are, it is. But you've got to be very careful that you're trading the markets, that trend. Here's the other one that's a good trending market. This is cable, the British pound against the US dollar. And I hooked into the most recent trade there, which is sitting at about $4,000 for a very small margin. And it's one of the ones that is trending and has been trending for a long time. There's a ton of volatility in this market. It's a really, really good trading market. Okay, where this all started, why did I start trying to do algos? I was annoyed, is the word. I could use a much stronger word, about the 1-bar counter trend that kept getting you short in an uptrend or long in a downtrend. And at that stage, I hadn't worked out the proper way to trade those counter trends. We now, if you're trading Danielcode time and you've done the tutorial, you know exactly how to trade counter trends, and sometimes you actually make a profit on them unexpectedly. Other times you break even. when you lose money on them, you don't lose much once you understand Danielcode time cycles. But this was done, as I say, back in 2018, and I hadn't mastered all of that stuff. And I was really searching for something that would allow me to stay in through these pesky one-bar counter trends. And that's why I started doing this algo. So you can see it does a pretty good job of that. Quite simply here, you've got a 3-bar high and low on it. And if you flavor your orders to say, yes, I've got a valid sell signal, but I want it to hit that black line before it gets filled, or when it gets filled, you'll find that you can blow out a whole lot of these counter trends that don't just get there. They're fakes. It's nice to know that there's a sensible methodology for overcoming that. Okay. Think flip me. It happens a lot in these algos where there's consolidations and not much momentum. And you should be thinking flip me and thinking about either a 2 or a 3-bar stop. If you're a bit more sophisticated, you can use a function of the average true range. Every program, Trade Navigator, or whatever else you might be using, has that tool there. You can switch it on. The default setting for the average true range is usually 7 days, which in my view is too short. And if you make it 29 days or any of the other Danielcode ratios, you will still be responding to the market, but you're responding rather than reacting. If there's any difference between those ideas, I want to be responsive to the market, aware of what it's doing, but I don't want to be having my risk parameters changed dramatically every 1, 2, or 3 days. And if your length that you're looking at, your average true range, is too short, that's what happens. But you can see here, it does clean up a whole lot of your trading. It makes it quite wonderful. Here we are. This is the question of 2 or 3-bar stops. This is a chart of coffee, which is a lot of the commodities have statistically more of these multi-bar runs than either equities or T-bonds or gold for that matter. The commodities, when they hit a position that they're short product or long product, it takes a while to clear that out of the system. So you tend to get more of these longer moves that move along. As you can see here, this market's a bit hard to see on these colors there, but you had 6,500 in a down move, then 2,200, then 3,600, then 1,900 up, 500 odd, and you're on about 4,000 right here. We actually got in quite a bit earlier than that. There's a buy signal some days ago. But it's good money, isn't it? And you can do this, if you can trade pink and blue, you can trade this without any real knowledge of the market, as long as you have a sensible stop loss regime. And if you want any particular advice on that, I'll be happy to tell you. I've touched on the basics of what you'd use, either an ATR, an average true range stop, 1, 1.5 maximum, never more, or a 2-bar stop, or a 3-bar stop, and you're seeing the differences between them here. And something for you to think about, just to get you scratching your head as I do, notice what happens when these two get to the same number. When the 2-bar and the 3-bar are the same number, can you see? That seems to be when you get a change of trend. There's no logical reason for that, except to say that the guys, we know the vast majority of them have got 2-bar stops. The ones who are not in that majority have got 3-bar stops. When they coincide at 0, you get a change of trend. Ever think about that? It's not as silly as it sounds. It's real. I promise you it's real. I mean, have a look at this bar here. This little guy here, right here. There's nothing else to suggest that this is going to give you a big move up. But look at the 2 and the 3 bars lines. They're right on top of each other. In other words, the variance between the 2 and the 3 is 0. And statistically, for some reason that I do not understand, once it gets to zero, you have a high probability of a change of trend. Rather interesting, the wonderful joys of markets, aren't they? Okay, so let's move on. And this is the 2-bar trend change. Generally, if you just look at these colors in a fairly general way, if they're in a blue, the trend is up. If they're in a red zone, the trend is down. Pretty simple. Once the trend is up or down, it requires the next bar to either take out the high or the low to elect that trade or to action that trade if you like. You'll get a few little squigglies. This one here, this is the S&P E-mini, and I have a feeling that this was the switch over to the sell side, and I have a feeling the very next bar took out that low by 2 ticks, which is rather naughty if you think about it. But that's your general view. If you know nothing about markets and you're interested, this is a great way to learn. It will teach you about markets. It will also make money for you over a period of time. Okay, let's go on there. And here we have gold. Look at this chart of gold. 1, 2, 3, 4, 5 biggish moves. In fact, very good moves. This is not current to today, folks. This was done at 3 o'clock in the morning. So the last bar on here is Wednesday's bar. If you look over the left-hand side, though, you can see how late this market was switching over to the pink cycle. And there's a reason for it, that the things I've asked it to do have dampened down the quick response stuff. If you want to get in 5 bars earlier, there's a Danielcode time signal to sell right at the high of that whole pattern. In the same way, there's a Danielcode time cycle to buy right at the low of October the 6th. You get in a whole lot earlier. So if you learn how to trade, if you've done a Danielcode tutorial or are going to, you can still trade these charts and you can make a whole lot more money than I'm showing on these charts, because you will be getting in much earlier and you'll have the skill to control your stop losses. Okay, this is crude oil. This is another one of the markets that's worth following. You can see here 2 or 3, 4, in fact, decent sized moves since about July. Good volatility in this market. Having a bit of a think about things now, but it has traditionally. Look at this, of all things, the US dollar index had the most massive up move, didn't it? It was absolutely wonderful. And it's giving it all back now, unfortunately. But this is a market that can trend and trend really well. And here's coffee. Coffee is a problem because, as Jerry knows and will tell you, it's on the ICE exchange. And I think Jerry's firm doesn't even bother covering anything on the ICE. That was the situation, Jerry. It may not be now. But coffee is a very good market. It does trend, and it's a reasonably decent dollar size out of your wins. There's nothing too exciting here. There's a 6 and a 3 and a 3. But all of that is money. It's all profit. Have a look at this. This is the dear old Russell, which, you know, can be as slow as a wet load of washing. But it had a decent rundown, did well. It's sad where it is now. Have a look at it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days in the same range. Huge consolidation means the breakout will be even better when it comes. Okay, so I'm showing you all these markets that are worth you thinking about for using the algo to trade. Here's silver. Very good market, silver. Very, very good on your Danielcode time cycles, as they all are. Some are better than others. This is one of the stars. It's very, very neat. And here's UST bonds and a flip me. You can see this market switched over, had a sort of a 8-10 day run up, switched over to the sell side, and the first sell signal, when that's elected, meaning the next bar trades below the low of that, that's your action signal to be in that market. So this market got you short, and pretty obviously there was a flip me sitting not far away. So that looked good to get into the flip me. Yesterday he got into it on Tuesday. Wednesday's up bar was very nice. Look what happened today. Are you going to get a double flip me? Remember, any valid buy, every Danielcode trade signal has a failure point. If that failure point is hit, you're wrong and you need to do something about it. And what you need to do about it usually is do a stop and reverse and go the other way. So, folks, if you're interested in the Danielcode trading tutorial, where I teach you everything worth knowing about safely and profitably trading futures and Forex, email me, jneedham@thedanielcode.com. I have said this before and I'm happy to say it again. To the best of my knowledge, the Danielcode is the best and most profitable and safest trading system I have ever seen or heard of. And we have clients, as I've said, making 400, 500, 600, 800, 1,000% on margin with their paper trading. Now, paper trading doesn't mean you're going to make that in real life, but it does tell you what the possibilities of the program are. I don't want any of my clients to tell you what their actual trading is, other than to say that a number of them are kind enough to say that their current real-life trading is reflecting what they had in their paper trading. So if you're interested in trading, there is nothing better. Get yourself over to the Danielcode. Write to me, email me, jneedham@thedanielcode.com. And this is what your trade should finish up looking like. This is Nirvana. This is trading Danielcode time signals. And this is the sort of trading you'll be able to do once I've taught you how to create and trade Danielcode time signals. This next chart I've shown you before, I think it's worth seeing again. This is gold for 2 years and 8 months. As much as I could fit in on one chart that you could still vaguely see what the turns in it were. Every single turn of any significance has come at the expiration of a Danielcode time cycle. And that's what trading Danielcode time cycles produces, something a whole lot better than what you're looking at there, because that's a fairly slow time cycle. I ran through that, and we, of course, trade faster time cycles. Better still, folks, you can take the Danielcode tutorial now. And how's this? If you don't match Mark L's returns within 10%, remember that was 1,000% on margin for NASDAQ futures for the whole of calendar 2016. If you don't match his numbers within 10%, I'll give you your money back. Paper trading has limitations, but it's a wonderful way of cementing Danielcode into your brain. So thank you for being with me, folks. If you, a lot came in late. Scotty's there. Vicky's with us. Hello, Vicky and Scott. Not Scott Peterson. Oh dear. I did miss a whole lot of you as you're a little bit late coming here. Chip's here. Glad to have you with us, Chip. And actually, good to have you, actually. Good to have all of you with us, folks. If you haven't already, please take a free trial of the Danielcode. Simply go to the website, click the free trial button, hit the register button. Any issues, contact Terry at support@thedanielcode.com, and he'll be happy to get you set up. This is our disclaimer. I do urge you to be aware of it. It's very, very easy to lose all your money trading futures and Forex if you don't know what you're doing. Equally, the good news is it's very, very easy to make a whole lot of money trading futures and Forex once you do know how to trade. It's a wonderful, wonderful thing. It's a total gift to have futures markets and Forex markets available to us traders. Such a privilege, such a wonderful way to make money. So that's us for today, folks. I look forward to talking to you at our next webinar, which will be a fortnight away. Greg's son knows what a fortnight is. It's 2 weeks. It's not an American expression, but it means 2 weeks or 14 days. 14 nights gives you a fortnight. And I look forward to talking to you then. Thank you for being with me today, and bye-bye for now.